All right, so I am going to just quickly mute myself, hide my video, and then you guys can jump right in. And as you guys are starting to go, I'm going to take this sort of separate screen off, and it'll just be you two. Um, and then Mark, just quick rundown. Uh, I'm going to put this recording up. I'm just going to, make the quick edits from front and back, and I'm going to post this to our YouTube. I'll get this to your team if you guys would like to share this anywhere, and we can get that shared on both ends. But we'll be posting clips to our Instagram. We'll be posting the full thing to our YouTube. So as soon as that's up, I'll get that link to you guys, and do with it as you'd like to. But appreciate
Great.
it again, Mark.
Wonderful. Thank you. I'm happy to do it and always want to add value.
Thank you. Appreciate it. All right. I'm gonna get going.
Okay. Hello, everyone. My name is Jesse Clinton, and I'm a financial advisor partner here for Veritas Private Wealth. As in the past, we've tried to provide clients with insights and outside partners on a number of different financial planning and, of course, economic topics, both in live forums and recorded forums. And certainly thank you for joining us today for this recording. We're featuring Mark Brownstein. He's the director of Emerald Medicare. And today we're going to take 10 to 15 minutes to review medical coverage options for those thinking about retiring or closing in on Medicare eligibility. Mark and his team work with clients to find, evaluate, advise, and enroll in financial Medicare plans and medical coverage. And they figure out what coverage best fits your needs. Their team has worked with thousands of individuals. Mark has led workshops for more than 4,000 clients and advisors, and he has been an exceptionally awesome resource for us. So we wanted to share some of his insights for you. And today is really just like an intro, right? So it should give you some basis to start to get you thinking about things. And this way, if you have questions, you can follow up with myself or Mark directly. And many of our clients and those we speak with are in a period where they're thinking about retirement, or they've just retired, or they're approaching Medicare eligibility, and it's a tough thing to figure out. So having a partner like Mark and hopefully ourselves, I think is instrumental in figuring out best practices and the best plan for you. So Mark, thank you again so much for your time. And with that, what we'll do is we'll get this kicked off with a couple questions. So first, let's start with what options for healthcare after work before Medicare eligibility are out there?
So when people are under 65, again, thank you for allowing me the opportunity to educate in some small way the people who are listening to this. The people who are under 65 who are not quite at Medicare age, um, they are looking at their own current coverage or the coverage that their spouse may have an opportunity to utilize. Very often, these people are a number of years away from Medicare age. So, in some cases, COBRA becomes the option. For an employee, COBRA is available for a year and a half, for a spouse and or a child. COBRA is available for 3 years. Essentially, COBRA is 100% of the full premium that someone would pay, meaning that they may have current coverage subsidized, but the company is paying the remainder. When you're on COBRA, you're paying 100% of the coverage, and that's the same coverage that you had as an employee that just rolls over to COBRA. And at some point, people are anxious and eager to move towards Medicare because in many cases it's better coverage and less cost. If COBRA is not an option, the Affordable Care Act, Obamacare, the exchange is often where people look. The closer people get to age 65, the more the prices compare uh, not so favorably to COBRA, meaning that the cost of COBRA could be high depending on the deductible that one has for the exchange. The price could be a little lower. Often what happens is people wind up choosing to stay on COBRA. because they're used to the plan, they're used to the doctors being in the network. They get a little dental, they get a little eyeglasses, and so the decision to move over to the exchange is not always um, a savings. On the other hand, it may be more comfortable to stay on the Cobra until potentially Medicare kicks in.
Okay, great. So make sure I understood it. Sounds like once you retire, before Medicare eligibility, you're going to be on Cobra. Um, you as the individual are now responsible for 100% of the premium, but you get the same coverage. And at that point, you have the ability to move over to some private healthcare, which could be less or more expensive, not sure, but definitely different coverage. So people usually wait till Cobra is no longer available.
That is correct.
Okay, great. And what are the best options once we are off Cobra? What's the next steps we should take?
So once someone's approaching 65, it's really about what kind of coverage do they have? What are their health needs? What is their budgetary needs? Who else is on the plan with the employee? Maybe the spouse, maybe a child. So in many cases, people have to make a decision at 65 to get something as simple as Part A. Part A is hospitalization. It's premium free for anyone who has worked 40 quarters or 10 years, either themselves or their spouse. So getting Part A at 65 is really an easy decision unless one has what's called a HSA or health savings account, which is a high deductible plan. In that case, generally people love their HSAs and would stay on their current coverage and their current HSA without actually getting on Part A. But for those people who do not have an HSA, many people feel pressure to get Part A. The information that people get often from their friends, their colleagues, maybe even from the mail is that if they don't get Medicare at 65, they may be penalized. There's never a penalty for not getting Part A. As long as you're working for a company of greater than 20 employees, one can delay Medicare, specifically Part A, until they retire. But people get nervous about this particular issue. They go ahead and they get Part A. They don't have an HSA. They get Part A. It's premium free. They get a card with Part A only. And then they hold on to that card until they retire. It's when they actually retire that it becomes really important. Now, for those people who are unemployed, self-employed, or working for a company of under 20 employees, they must get Medicare A and B. But the decision on whether to get Part B takes a few questions, takes an understanding of their current situation. Um, Also, because of what's called an income adjustment that is attached to Part B for high income earners, sometimes the decision to go on to Part B sometimes may depend on how high their income actually is to determine if the premium on Medicare, Part B premium, is close or far away from savings on their current plan.
Gotcha. Okay, so we get to Medicare eligibility, which is still 65, right?
Yes, it is. Unless someone's on Social Security disability for 2 years, in the 25th month, they actually get Medicare automatically.
Okay. Okay, so without disability, we near 65, we gotta, if we're working, no problem. We keep our current coverage. We no worries on Part A. If we're not working, we got to make sure we figure out Part A, which is hospitalization. And then the real question comes in for Part B, right? That's the main coverage, and that's where we have a lot of options. Is that right?
That's correct. Part B is all the doctors, the specialists, the X-ray, the diagnostic. Once you have Part B, then one has to consider what supplemental plan one wants to look at because A and B combined is considered 80% coverage. So the risk of having coverage without an additional supplemental plan puts people at some sort of greater risk. So once they get A and B, and the process to get B is about submitting some forms to the Social Security office that we often help them with. But beyond B, it's about the decision between the two types of plans, Advantage or Medigap.
Gotcha. And premium determination for Part A and Part B are from historical earnings. Is that correct?
So the Part A premium is zero again, as long as someone or the spouse has worked for 10 years or 40 quarters. Part B does look back at the income from 2 years prior. They're basically looking at a line 11 of federal tax return, which is adjusted gross income. But if in fact that those years of income are high, then there is what's called a life-changing event form, which basically is an estimate of current year's income. So if somebody has worked hard, they've made good money, now they're retiring, their income is dropping, even with any kind of distribution or any other kind of income that they may have from other sources, usually income does drop. This life-changing event form will allow the Part B premium to be reduced by filing this very simple but important form that saves many, many clients literally as a couple thousands of dollars a year.
Great, great. And that's something you help with, or our clients should go to the Social Security site? What's the best way to do that?
So all the forms that I would speak of, we help everyone fax it to their local Social Security office. They can certainly deliver it. They can send a return receipt requested, but the services we provide is certainly to fax it on their behalf once the forms are filled out. Again, once you have Part A, you need to request Part B. There are two forms. And once you get the bill for Part B, there's this life-changing event form. Again, willing and able to fax the forms over to the local Social Security office to appeal that higher Part B premium.
Okay, great. So we get towards retirement, and we're 65 eligible. We got A, we got B. Now we got to figure out our supplemental coverages. And my simple understanding, if I were really, and you'll tell me if this is right or not, but you have this, you either have supplemental plans through the government, or you have a more private plan. And it sounds to me like the private plans are more pay as you go, and the government plans are more premium based. Does that theory sound right, or is that more?
It's close.
Okay.
And so, in addition to again A and B, which is 80%, they're actually better defined as Advantage plans or
Mhm.
Medigap plans.
Okay.
The word supplement is confusing to people because anything in addition to Medicare is a supplement. So the Advantage plans are, as you said, they're the low premium, they're their HMOs, PPOs. They're mostly zero premium plans, which are very marketed clear across the country in people's mailbox and on TV, where you get these extra benefits like dental and eyeglasses and over the counter and acupuncture. These are a network so that you are always subject to the network. They're managed care. It includes a prescription drug plan at no additional cost. It's a nice package. And so very low premium, but you pay as you go. The other option that people have, often called Med Supplement, is really a Medigap plan. And this basically fills the 20% gap almost completely. Depending on the part of the country that someone lives, the premium for that could be as low as $100 in South Carolina or similar, or depending on where people live, it could be up to $300 a month. But that covers almost all of the 20%. The difference between this Medigap plan and the Med Advantage plan that I mentioned earlier is that in the Medigap plan, you need to add a standalone prescription drug plan that, again, we're evaluating to make sure we put the right plan in place based on people's medications.
Okay, great. So it sounds like that's really middle of the lane for you. That's where a lot of the heavy lifting comes in, and your expertise comes in with those supplemental plans. Is that the term,
Yeah.
or?
So right. So supplemental plans being both versions. So there are 4 states in the country where there's never any underwriting: New York, Connecticut, Massachusetts, and Maine. And so if people wanted to start out with an Advantage plan, maybe save thousands of dollars a year per person, maybe they're in good health, no chronic issues. They're perfectly fine with the network of doctors and the few times they visit. They can start out with an Advantage plan. In those cases, people in those 4 states can switch over to a Medigap plan without any health questions or underwriting. In 46 states around the country, that is not possible. So in the explanation and in the education that I give to people who I speak to, I make sure that based on the state that they're in, they understand their ability to switch from one plan to another. But the decision is certainly theirs, and the cost sometimes is a factor. But certainly the Medigap plans, you can go to any doctor you want, anywhere in the country that takes Medicare, which is about 95% of all doctors, which clearly gives people peace of mind, and it gives them the ability to travel without any concern about being in a network.
So it sounds like it's a huge advantage, especially for someone young and healthy, younger, healthier, to start with that plan, especially in one of these states that doesn't have underwriting, because you could just switch over at any time to the lesser premium or more premium, lesser pay-as-you-go type of Medigap plan. Is that right?
So again, everyone's situation is a little different. Their conservative nature may dictate them not uh, wanting to be in a managed care plan. Some people have an aversion to it or have seen some press about that. I believe that both are worthy of consideration. But as you said, it is very true that in those states, the ability to change does lead people to, I say, try it for a year. If it doesn't work, you can change during
Mm-hmm.
open enrollment without any questions, and people are often comfortable with that.
Mm-hmm.
But as you would expect, everyone makes their own decision based on their own needs and their own concerns.
That's great. That's great. So last question. And so obviously this is the type of thing that you know, people approaching some of these topics can reach out to you on. I guess my last question would be, if I am retired and I'm, retired early, before 65, mid 50s, and I'm off of Cobra, what do I need to be thinking about in terms of coverage, and where would you advise?
So there are a few companies that actually work with people around the Affordable Care Act and the exchange. Because the truth is that it is a market that no longer pays really commission. And so the only way to actually get guidance is really through someone who can do the consulting around that. My services are free. Theirs are not because they don't get paid by the insurance company for the work that they do. But it's important to look at doctors and meds, no matter whether you're on Medicare or you're not on Medicare, and the frequency of your usage of them. So when it comes to the under 65 market, it's really about age and it's about how large a out-of-pocket maximum. So you're going to pay more for a premium if you have $2,000 out-of-pocket maximum versus 5 or 10. If somebody feels like they're in good health and they have a $10,000 maximum, they're going to pay a lot less premium than someone who's paying having a $2,000 out-of-pocket maximum, and that's how it's based. But of course, doctors are always paramount in making the decision.
Great. So someone in that arena, retired a little earlier, needs to go to the private exchanges, try to figure out what best coverage is for them. Is that something that you would help them with, or you would point them to someone who might be a pay-as-you-play type of advisor? What's the best way for them, again, to navigate that?
Yeah, I would point them in a direction. It's taken me years to find a reliable source for that particular area.
Okay.
I stick with my home cooking,
Mm-hmm.
which is Medicare and or people maybe on Medicare and Medicaid. But I stick to what I do and my staff does best. And I certainly make referrals to people needing Medicaid and or needing the Affordable Care Act.
Excellent. This is terrific. Any final comments, Mark?
My final comment is the importance of prescription drugs. Is that the changes that are going on in 2024 and into 2025 are going to impact every American. In the Medicare world, it's important to review your prescription drug plan every single year. These carriers are doing what I call bait and switch. They're bringing in clients and they're changing their prices on both the premiums and the medications. We're seeing it already mid-year. And so I'm concerned about the future of the medication costs. I think the press is not giving the full bit of information. So I can only encourage anyone listening to this to pay attention to their prescription drug costs each year. Talk to your doctor if needed about alternatives. and know that things like GoodRx and other discount cards are available to potentially get savings.
Sounds great, Mark. Can't thank you enough for your partnership and for your time. Cole is bringing up one more time the very handsome pictures of both of us. Wish we looked like that every day. And if you had any questions, please feel free to reach out and contact us, and certainly appreciate everyone's time. Thanks again.
Thank you.